Good afternoon, ladies and gentlemen. I'd like to welcome you during the meeting for the analysts and investors related to the publishing of the full year 2018 earnings of Tauron Group. The earnings and the highlights of the past year will be presented by Mr. Filip Grzegorczyk, the CEO, and Mr. Marek Wadowski, the CFO of the company. My name is Martin Laurer. I'm working for Investor Relations team. Our meeting will have a traditional course. We'll start with a presentation by the management board, and this will be followed by the Q&A session. Let me remind you that our earnings conference, is being broadcast over the internet, also in English. To my email box, you can send questions that will be answered in the second part. I will hand them over to our experts and management board to answer. And let's start the presentation, Mr. President. Thank you very much. Good afternoon, ladies and gentlemen. We have a pleasure today to present to you the operating and financial results achieved by Tauron Group full year 2018 and in Q4 of last year. To start with, I will present the general financial position of our group, the highlights of last year, and then I'll present the results of both investment program, CapEx program, as well as the efficiency improvement program. On the other hand, the CFO, Mr. Marek Wadowski, will present the macroeconomic and market situation and will present the financial results by the individual segments of our operations. First of all, we'd like to emphasize, ladies and gentlemen, that in 2018, Tauron Group posted financial results that, after excluding the one-off events, are in line with the market expectations and our plans. We have maintained also a stable financial position of our group. Moving on to the detailed data presented on this slide, first of all, one needs to note that in 2018, the sales revenue topped 18 billion PLN, which means a 4% increase versus last year. The group's EBITDA reached 3.4 billion PLN. The net profit was significantly charged with the one-off events of non-cash nature due to the impairment charges related to the assets, carrying amount decreasing. Our CapEx last year was 3.7 billion PLN. The 6% increase of the capital was impacted, first of all, by higher investment outlays in the distribution and mining segments. The net debt to EBITDA ratio, calculated excluding the subordinate debt at the end of 2018, reached 2.54. The details on the debt and financing will be presented by Mr. Marek Wadowski, the CFO. Moving on to the operating data, one needs to note that the total electricity distribution delivered to the customers reached 52 terawatt hours, so 1% up versus 2017. And the number of customers connected to Tauron's grid reached 5.6 million customers. In 2018, Tauron Group produced 16.2 terawatt hours of electricity. Meanwhile, the generation segment posted a 36% increase of EBITDA thanks to the implementation of the efficient trading and commercial strategy and the dissolving of a provision related to the employee benefits in the first half of 2018. On slide 4, you can see the financial results and operating data for Q4 2018. Let me remind you that the consolidated net profit in Q4 2018 was impacted by the recognizing of impairment charges, first of all related to the assets in the generation segment, and the setting up of a provision in the amount of 214 million PLN related to the estimated impact of the legal regulations related to the stabilizing of electricity prices in 2019. At the next slide, you can see the highlights of last year, 2018. Most of those events were described during the previous conference calls, earnings conference calls. Therefore, now I'd like to draw attention to the few most important ones, highlights. And first of all, one need to look at what's important for the entire power sector in Poland, the implementation of the first capacity market auctions. Under this mechanism, the electricity generators starting from 2021 will be receiving the remuneration for readiness to deliver capacity. After I describe this slide, I will present a few details on the results of the auctions for Tauron. It's also worth reminding the initiatives that guarantee funding that's required for the further sustainable development and growth of our capital growth. Finally, in December, we signed with Bank Gospodarstwa Krajowego, BGK, a loan agreement worth 1 billion PLN. Furthermore, we signed agreements with another strategic partner of ours, namely the European Investment Bank, and as a result, we obtained additional 750 million PLN in hybrid financing. If we talk about the capacity market main auctions in 2021-2023 time frame, it is worth stressing that we were successfully competing in 3 main auctions of the capacity market, which were held in 2018. Our strategy for the auctions brought the expected results, and under the auctions held in Q4 last year, Tauron Group subsidiaries concluded agreements under which we will receive substantial additional revenue up until 2037. It is important that our flagship investment project, namely the Jaworzno generating unit, received financial support for 15 years under this mechanism in a total amount of 2.8 billion PLN. The total revenue of Tauron Group under the auctions held so far will reach 4.8 billion PLN, with more than 80% coming from multi-year agreements, namely 15, and 17-year-old agreements. Now let me hand over to Mr. Marek Wadowski, the CFO, who will present the details on the financial situation of the group. Ladies and gentlemen, in 2018, the macroeconomic situation was favorable for Tauron Capital Group. The GDP growth rate was high. The manufacturing output sold also went up. The existing consumption went up by 1.7%. The domestic electricity production was a bit lower. The balance was supplied with imports. It's worth noting that in 2018, the electricity production from renewable energy sources was definitely lower, markedly lower, mainly due to deteriorating worse hydrological and wind conditions. In 2018, we dealt with a significant increase of electricity prices, especially in the second half of 2018, both for the second half of 2018 and pricing for the subsequent years as well. The revenue in 2018 is higher, 4 percentage points. First of all, due to the increase of electricity prices. Also, it is worth noting, worth highlighting that in terms of electricity distribution and trading services, the significant decline of revenue was due, first of all, to the different recognizing in the accounting systems, in the accounting ledgers of the transition fee. In the previous years, the transition fee was included both in revenue as well as in the cost. Starting from 2018, we are not recognizing the transition fee in the revenue and cost. It is netted. So what I say, it's gone from the revenue and from the cost. It has a neutral impact upon the earnings, but it has an impact upon the revenue. Net profit in 2018 was charged to a large degree with impairment charges related to the fixed assets carrying amount. If we were to adjust this net profit by these charges, by impairment charges, it would be around 900 million PLN. EBITDA after the adjustment due to the one-off events in 2018 was comparable to flat roughly versus the previous year. At this point, it's worth noting one-off event that took place in 2018, namely the setting up of a provision related to the contracts giving rise to charges. This setting up of a provision was required according to the international financial reporting standards. The total amount of this provision, 214 million PLN. When setting up this provision, we made the following assumption. We will be reflecting the financial position of the group according to the legal status as of the end of 2018. As of the end of 2018, we had the following legal situation, that the law was published about maintaining the electricity prices in 2019 at the 2018 level. However, there was no ordinance, no regulation related to the law that was in force at the end of 2018. It was not published until today. Probably will not be published ever, because the law was simply amended in the meantime. For us, the amendment of this act means a change of the legal status, legal situation. So the legal situation as of the end of 2018 was different than the current legal status. According to the legal status as of the end of 2018, we were obligated that under Tariff G, we were obligated to maintain the prices at the level of 2018 in 2019, and at the same time to return to the tariffs and prices in the other cases. Whereas due to the fact that both the prices in the price list and in the tariffs were higher than the prices under the bilateral contracts, we didn't have this requirement, this necessity, due to the fact that, as a matter of fact, we are not talking about the reduction of prices. We're supposed to actually increase those prices. So the problem of contracts giving rise to charges did not arise there. The only area where this problem arose was in the G tariff. If it happens that the regulation, the ordinance, is to the amended act, to the amended law will be issued, then we'll be accordingly adjusting this provision that was set up at the end, as of the end of 2018. We are not aware as of today of the amount of value, the impact of the new ordinance on the financial situation of Tauron Group, for a simple reason. In order for us to calculate this impact, first of all, the ordinance must be issued in its final shape, and secondly, we have to have data for the calculation, because the ordinance is designed in such a way that the compensation amount is calculated, of course, based on the formulas included in the ordinance. However, when we put in the data that is published within 14 days after the ordinance, so which means that without knowing the data, we are not able to estimate the final impact of the law. We assume, we hope, we count on that this impact will be neutral on Tauron Group's financial position. However, we have to wait still for the final legal regulations. Once they are published, once we have the data, once we are able to calculate the impact of this law, then of course we will disclose this information. In Q4 alone, it is worth only noting that the fact that also here, in this case, the net profit was strongly impacted by the impairment charges, as well as the setting up of a provision in the supply segment. Looking at the individual segments' earnings for full year 2018, one, first of all, should highlight the fact that the distribution segment is invariably our most significant segment. In 2018, the distribution generated 75% of EBITDA, of the group's EBITDA, and we assume that in the future this will continue to be the segment which will, to a large degree, stabilize the Tauron Group's financial position. In Q4 alone, due to impairment charges, the operating profit in the generation segment was negative. However, the full year, excluding the impairment charges for this year, was very good. In the supply segment, the operating profit, EBIT, was negative due to the provision that was set up. Comparing EBITDA for 2018 versus 2017, we can see that two segments had an impact upon the EBITDA, the distribution and the generation segments. The negative impact was made by the supply and the mining segments. In Q4 alone, in this respect, the situation is very similar. Now, ladies and gentlemen, moving on to the earnings of the individual segment. Let's start with the distribution. This is our most important segment. As I mentioned before, it is stabilizing TAURON Group's financial position. As I also mentioned, both in terms of pricing and costs, we are showing the impact, one may say, of the exclusion of a transition fee. This is the exclusion of a transition fee in the amount of around 740 million PLN has a neutral impact upon EBITDA. However, from the accounting point of view, it is visible, it is noticeable. The most important factor that impacted the earnings of the distribution segment is, first of all, the increase of the volume and the reduction of fixed costs. The increase of the volumes had an impact of 117 million PLN. The reduction of the fixed costs is about almost 130 million PLN impact. In Q4 alone, also the main factor that had an impact upon the earnings of the distribution segment was the volume and, of course, the reduction of fixed costs. In terms of the other parameters of the distribution segments, ladies and gentlemen, it is worth noting the fact that, first of all, in 2018, we were saying that the events that occurred in 2017 that led to us not, as distribution, complying with the SAIDI-SAIFI coefficients due to the disastrous nature events, big events that took place both in April as well as during the long weekend in August, as well as later on in the fall, meant that we exceeded the factors, the coefficients that the President of the Energy Regulatory Office set as the maximum permitted ones. As a result of a number of talks to the President of the Energy Regulatory Office, thanks to the constructive approach of the President of the Energy Regulatory Office, we managed to bring about a situation where in 2019, the impact of those events is not taken into account. Therefore, it doesn't have an impact upon the tariff in 2019 because the massive scale one-off events are excluded with a low probability of the occurrence of such events are excluded from the calculation. One should also add that in terms of the SAIDI-SAIFI factors, it's highly probable that a completely new regulation, completely changed regulation will be put in place. No longer SAIDI-SAIFI factors will be taken into account. It will be replaced with interruption, duration, CPT and CPA. Anyhow, they also be split into various areas. It will be split into the cities, smaller cities, municipalities, villages, and so on. It will be calculated differently. So we also probably, if such regulations are issued and approved, we will also be presenting differently this area with respect to the distribution segments, operations. Generation segment now. We were dealing, first of all, with the increase of EBITDA. This EBITDA growth was possible due to increase of margin in this line of business. The main factor in 2018 was a different trading strategy, higher revenue from the operating capacity reserve. This enabled us to achieve a better result. However, an important piece of information is the fact that the result in 2018 in the generation segment was charged with to a much higher degree with the cost of purchasing the CO2 emission allowances. We recognize the fact that the CO2 emission allowances will have a significant impact in the future on this segment. Therefore, also, among others, this type of approach to the estimates of write-down on the fixed assets. In Q4 alone, in the generation segment, we can also see the impact of a higher margin on electricity, as well as the impact of costs of purchasing the CO2 emission allowances. Looking at Q4 alone, of course, here it's worth to note that the CO2 emission allowances costs are proportionately much higher in the first quarters of 2018 due to the fact, as we mentioned before, to the change of accounting. We switched to the FIFO method, so in the second half of 2018, the cost of CO2 emission allowances were simply higher. Supply segment now, it is worth noting two important factors. The first one I already mentioned, namely setting up of the provision related to the contracts giving rise to charges, and the second important element is the element of the very margin of electricity. Ladies and gentlemen, we are dealing with the following situation. If electricity prices are rising, this means that also the pressure on margins is growing. The competitiveness is increasing. Our consumers are expecting lower prices anyhow. This, as a matter of fact, means that the supply segment faces bigger challenges. And you can see that in the EBITDA result, which we are showing that the EBITDA was almost 90 million PLN lower due to that reason. Q4 alone was mainly we can see the setting up of a provision related to agreements giving rise to charges. Nevertheless, we assume that in 2019 the situation will clear up, and we expect that the final impact of the regulation will be neutral for Tauron Group. Moving on now to the mining segment here, invariably the basic factor impacting the results of the segment is, of course, the volume of coal extraction output. In 2018, this volume was 1.4 million tons lower than in 2017, which, as a matter of fact, meant deterioration of our earnings in this segment. Of course, a very important element besides that didn't have a full impact upon the 2018 earnings, it'll have a greater impact on the 2019 earnings, was an increase of costs. We can see rising costs of purchasing equipment, devices, renting of mining combines. These are the costs that are very important for the mining segment. They are rising quite significantly. Therefore, this segment is under the cost increase pressures, and the only solution to this situation is a substantial increase of coal extraction output volume. Q4 alone reflected the same situation as throughout 2018 in the mining segment. In terms of financing, ladies and gentlemen, I'd like to mention here or draw your attention to one thing here. Namely, in Tauron Group, in 2019, we assume the repayment of the bonds issued on the domestic market. Recently, we disclosed the information that under this program, the bond issue program on the domestic market, we topped the 3.0 net debt to EBITDA ratio. Here we are showing the 2.54 ratio. The difference in terms of these ratios is due to a different calculation methodology. The net debt to EBITDA ratio according to domestic bonds does not take into account the subordinated bonds. That's where the difference comes from. We realized the situation for some time because already 3 years ago in 2016 we signed an agreement with bondholders that represent the blocking minority. This agreement says that in the bondholders in the situation as we are dealing with now decided to have a vote, to have a meeting of bondholders during which they would like to decide whether the bonds need to be repaid early, then the blocking minority should be able to block this decision on the early repayment. In my opinion, of course, it is possible. The bondholders have such a right to demand early repayment, to vote on that. In my opinion, the likelihood of the fact that an earlier payment takes place is very low. In my opinion, it's actually equal to zero, because first of all, the motivation shouldn't be too high among bondholders to the fact that the money for the repayment of domestic bonds, we have guaranteed funding, as we are showing you at the end of 2018. The available funding amount is 5.8 billion PLN. This is the funding available under the contracts agreements already signed. If we were to repay 1.8 billion PLN, we would still have 4 billion PLN in available funding left, and we are prepared for that. We were taking that into account, and from the very beginning we assumed that in 2019 we will repay this domestic bond issue program. Secondly, also, if such a meeting of bondholders were to take place, it's also clear that the blocking minority will be effective in blocking such a decision. So we are of the opinion here that the situation in this respect of Tauron Group is stable. Let me hand over the floor to the CEO now. Thank you very much, ladies and gentlemen. We are moving on to the work progress on key projects, and the key project, namely the construction of Jaworzno unit, the work progress at the end of last year is 85%. Currently, the work progress is above 88%. After we complete this investment project, it will cover the demand for electricity from 2.5 million households. Talking about this project, it's worth reminding that last year the Nowe Jaworzno Grupa Tauron special purpose vehicle was joined by Polish Development Fund, PFR, which is ultimately to contribute to this project up to 880 million PLN. Another important event or project is the CCGT unit construction in Stalowa Wola. Here, the work progress at the end of last year was 86%. We are also conducting modernization works on the Łagisza power plant, which involve adding the heating unit to the 460 megawatt unit at power plant unit. The work progress is 21%. Other large projects are related to the mining segment that include the 800-meter level construction at Janina coal mine and the Grzegorz shaft at Sobieski coal mine, as well as an investment program, CAPEX program at Brzeszcze coal mine. Ladies and gentlemen, we would like also to clearly emphasize that the CAPEX projects underway are only a continuation of a project that were commenced in previous years. However, the new CAPEX are related mainly to the need to adapt the generation fleet to the environmental requirements, namely the BAT conclusions. What is seems very important, all our CAPEX is reviewed in detail, and wherever possible they are being reduced, including the streamlining, the optimizing of asset management. This year will peak as far as our CAPEX is concerned, that will reach between 4 and 5 billion PLN, including more than 1.5 billion PLN is planned to be spent on the completion of a 910 megawatt unit construction at Jaworzno. Talking about the capital expenditures by segments, in 2018, 3.7 billion PLN was a total CAPEX. Traditionally, the biggest CAPEX was spent on upgrading of the distribution grid assets and connecting to the distribution grid of new customers. The total CAPEX in the distribution segment was 2 billion PLN. As a result, last year we upgraded 1,600 kilometers of existing, and we built 2,800 kilometers of new power lines, whereas the outlays in the generation segment was mainly spent on the construction of a 900 megawatt unit at Jaworzno, with a total budget of this project topping 6 billion PLN. Of course, we also allocated CAPEX to the mining segment in the amount of almost 250 million PLN, and these outlays were related to the construction of the Sobieski coal mine shaft and the Brzeszcze coal mine CAPEX program, and the construction of a 800-meter level at Janina coal mine. Ladies and gentlemen, at the end of 2018, we completed the implementation of the efficiency improvement program that was the third initiative of this type implemented by Tauron Group. Its implementation in 2016-18 timeframe was in line with a plan, which meant that we realized the assumed financial targets. As a result of the effectively improved efficiency improvement program of the last 3 years, we achieved a cumulative positive impact upon EBITDA in the region of more than 1 billion PLN, with more than 400 million PLN in 2018. In terms of capex, we achieved over a 3-year timeframe savings in the amount of 650 million PLN, and in 2018 alone, more than 200 million PLN in savings. It's worth adding that our activities aimed at improving efficiency, especially the cost efficiency, at the instruction of a supervisory board, were comprehensively reviewed and received the positive opinion of an independent external auditor. Ladies and gentlemen, at next slide, we are showing the results of implementing the so-called strategic initiatives. Those initiatives will be generating around 300 million PLN in additional EBITDA per annum, and similar as in case of the efficiency improvement program, it will be a recurring effect in the subsequent years starting from 2020. Finally, ladies and gentlemen, I'd like to hand over the floor to the CFO, Mr. Wadowski, who will describe the 2019 outlook by individual segments of our operations. Thank you very much. Let me start with our largest segment, namely the distribution line of business. This distribution, we assume that the EBITDA in 2019 will be flat versus 2018, with the possibility of a slight increase due to the increase of regulatory asset base going up to 17.5 billion PLN, and with a stable weighted average cost of capital. The fact that the tariff was or will become effective starting from April 6 this year, so it was not there throughout the first quarter of this year. It will have an impact upon the earnings of the distribution. However, it will not have an impact on the outlook for this segment. It namely means that had this tariff been in effect starting from January 1st, we would have had a better result of distribution. We don't expect any declines. The volume of electricity distribution we assume to be similar versus 2018, slightly up, a slight increase. Probably this increase will be lower than in 2018 versus 2017 due to the fact that we are observing here maybe not very deep, but a bit of a slowdown in terms of electricity consumption. In the generation segment, we can see a growth outlook in 2019. First of all, due to the increase of electricity prices by more than 20%. Let me tell you that each time we are contracting, of course, electricity ahead of time. So what we are talking about now, the increase of electricity prices, is also a reflection of what we are seeing in the contracts that we already signed last year. And therefore, we can see that this factor will have a positive impact upon the outlook for the generation segment. The increase of the average coal price we can see in the region of 3 percentage points. This is related to the contracts that we signed for the periods longer than 1 year, and this type of increases were included in those agreements. The increase of the CO2 emission allowances price, quite significant one. This is, of course, the result of what is happening on the market, the result of the contracts concluded for 2019, the hedging contract. Better prospects, better outlook for the renewable energy sources, definitely a better outlook, both due to the higher price, I mean here the electricity price plus the green certificate price. Also, due to the better wind conditions, we can see in Q1 that we had much more winds, stronger winds in Q1 versus last year. That led to better earnings for this line of business. Worse outlook, deteriorated outlook for the heat segment asset, mainly due to the slowdown in the reflection of increase of cost in the tariffs. The first point in time where we can see the reflection of increase of cost in the tariffs will be Q4 this year. So I can say that Here, in this respect, this outlook is a bit weaker than what we dealt with in 2018. In the supply segment, we assume a decline, a few percentage point decline of electricity volume supplied to the final consumer. As I mentioned before, we can see due to the rising prices themselves, we can see a larger, greater pressure on margins, and we can also see in terms of volume itself that we are not able to be competitive in all areas. Therefore, such a price decline in 2029, this is what we'll be dealing with. Rising electricity purchase price, this is a factor which is for the supply segment, is a factor that leads to the deterioration of its EBITDA. Of course, a large question mark hangs over the final result, the ultimate result of the regulatory regime with respect to the electricity prices. We have to wait for that. We have to wait for the final shape of the ordinance, of the regulation, the data that we will use to calculate the final value of the compensation. As I mentioned before, we are assuming that this impact will be neutral. However, we will be certain of that fact only once the final regulations and data is known. In the mining segment, we can see growth. This growth is only due to the larger volume. I can phrase it following way. Describe it the following way, because we mentioned a number of times we can see some better outlook for the mining segment, and then it turns out finally that that outlook, those prospects were not really reflected finally actually in the actual results. Let me tell you that after Q1 earnings versus what we assumed, one may hope that the growth in 2019 will actually take place. However, we're not expecting here a situation where in 2019 we'll be dealing with some big breakthrough in the mining segment, due to the fact that in order to see a breakthrough, a large improvement of the earnings, first of all, we need to see the first effects of CAPEX that we are conducting. The first investment project that is completed is the investment at Janina coal mine. As a result of this investment project, we'll be able to improve the productivity of this coal mine. However, this investment project will be completed only in 2021, so in 2 years' time. So we need to wait a little bit more time, but a bit longer to see the large impact in the segment. We assume that the average coal sales price will be maintained at the same level as in 2018. On one hand, we can see rising coal prices and the longer-term contracts. However, on the other hand, we can see what is happening on the spot market. We can see a large inventory of coal in Poland. We can see also pressure on coal price reductions. So on average, we are assuming that the coal price will be flat versus 2018. Of course, as I mentioned before, rising costs in this segment will have an impact. We are hoping that the higher output, coal extraction output, will nevertheless lead to a slight improvement of the earnings of the segment in 2019. The mining segment is highly sensitive to volume changes. Therefore, even a small increase of volume leads to major relief in terms of higher costs. We are improving the productivity improvement program, which should help us to improve productivity. But as I mentioned, we don't expect to have a major impact on the productivity before we complete our major investment project. In terms of CAPEX, we are expecting, of course, the completion of a 910 megawatt unit in 2019. The entire CAPEX program we estimate to be worth between 4 and 5 billion PLN in 2019. We do realize that the order of magnitude, the difference between 4 and 5 is 1 billion PLN. It's a very large amount, but there's a number of elements under this CAPEX program which may be reduced. For instance, the investments aimed at upgrading our generation units to be in line with best available technologies requirements. We assumed originally to be 800, 900 million PLN. Finally, it turned out that after the tender proceedings and some modifications, because in some places we are able to do it differently, not using large capex, we're able to ensure better parameters in terms of flue gas emissions. It turns out that the entire program of upgrades related to BAT we can manage within 750 million PLN. I'm talking about the entire both generation and heat. Before it was 900 million PLN in both power and heat generation. So we can see some room for streamlining, for optimization in this area. So we hope that in 2019 we'll be able to somehow reduce our capex in this area in 2019. And overall, finally, the net debt to EBITDA ratio, we are assuming it will not exceed the 3.0 value. We have some instruments such as appropriate capex management, capex spending management, which we'll take advantage of if it turns out that there is some strong pressure on our leverage ratio, that there is some threat of net debt to EBITDA ratio being above 3.0. Ladies and gentlemen, that's all from us. I'd like to hand over the floor to Marcin now. Thank you very much to the Management Board for the presentation. I'd like to invite you now to ask questions. Also, our recipients of the web broadcast, our Management Board will have some support from our expert, Mr. Director Dariusz Niemiec, the Managing Director for Trading, and Mr. Sebastian Goda, the Executive Director for Analysis at Tauron Polska Energia. Please, let's have questions, please. Mr. Paweł. Good afternoon, Paweł Puchalski, Santander. A lot of questions, as a matter of fact, but let me start with generation. The outlook for generation is grow, but if we split the conventional into conventional, renewable, and heat, is it so that the heat will have a decline? In the conventional generation, will have increase of electricity prices will be eaten up by the CO2 prices increase, and the entire growth that you are talking about can be generated at this relatively low or small renewable energy segment. That's the first question. Secondly, the CEO at the beginning of his statement mentioned that the regulator in the distribution sort of gave you a relief and gave you a break with a penalty for 2019. I understand this fine was postponed until 2020. So now what order of magnitude we're talking about? Is it tens of millions PLN, or is it closer to 100 million PLN in penalty in the fine? And the third one, okay, let's start with the two. Well, let me start with the second question. Well, in 2019, that's true. One may say that the regulator gave us a break in terms of a fine for the mass-scale disaster type of one-off events. And during the talks with the regulator, during the process of agreeing upon, we were very happy to see the regulator accept our arguments and came to the conclusion that those mass-scale disaster-type events we have little to do about it, and we can be very strongly burdened by it. But you don't see it in the 2019 tariff. As far as the tariffs for 2020 and the subsequent years, the works continue underway to change the overall system for motivating, incentivizing the distribution segment to improve the quality of services. The regulator is working on the introduction of two factors, CTP, the duration of a break, and CP, the frequency of interruptions. Those factors, those coefficients will be allocated to 4 areas: large cities, smaller cities, and ordinary cities and villages. So we'll have 8 indicators like that. 2 indicators split into 4 areas, and those regulations have not changed yet, but as part of works on these regulations, the works are underway too, and the regulator accepted that in 2019 that this is a good approach, that we should eliminate the mass-scale disaster-type events according to the same or similar methodologies being applied in the US, so namely cutting off by the 2.5 beta. So we have a distribution of the occurrence of various types of phenomena that interrupt the supply of electricity, we cut off the events that have very low likelihood of occurrence, whereas they have a very large impact upon the supply of electricity, and this is what the works are continued on. As of today, if the regulations do not change, if it turns out that we return to the old regulations, then one may say that's true, that for 2019, the ultimate impact is under question mark as of today, but the work's underway. The talks are going in the right direction, in a positive direction. The regulator accepted that, adopted this approach for 2019, and we hope that in the subsequent this will not have an impact. Of course, the new indicators, the new split, also means new challenges. After the ultimate regulations are published, we will see, as a matter of fact, what challenges we are facing. However, definitely, if such regulation with this 2.5 beta cutoff were to be put in place, that would have a major positive impact. All those large mass-scale disaster-type events. There's one more condition: that it must be a second degree of some burden. There are three degrees to be implemented by the Institute of Meteorology and Water Economy, Water Management. So works underway on this methodology, and hopefully ultimate shape of this regulation will be such that these type of events will not have a major impact. With respect to the first question, let me answer the following way. That's true, yes, with subject to one comment. Of course, with respect to the renewable energy sources, we see positive outlook. In the heat segment, we expect deteriorating outlook due to the lower passing on the cost. Slower passing on of the cost. Let me add that as of the end of March, the President of the Energy Directorate Office published the data, published the indicator that will be used for modifications of the new tariffs in the heat segment, and it turns out that according to the new tariffs, as a matter of fact, we are able to pass on the increase of costs in the region of 30 to 40%. So as we said, we can see deteriorating outlook. First of all, due to the increase of costs, CO2 costs mainly, coal as well, but to a lesser degree. With respect to the conventional assets, generation assets, that's true. The burden of CO2 on the profit of the earnings is very strong, but in 2018 we also contracted a lot of electricity, and we contracted this electricity at a level that guarantees for us a better profit better result in 2019. This is also due to the profile of our contracts. It is based on the moment that we contracted with electricity supplies, so we can see a slight increase, not so strong as in the renewables, but not a minus, not a... Okay, and the final question, because the management board is mentioning the leverage ratio, net debt to EBITDA ratio of 3.5, and I'm a bit confused now because in the annual report I can see 2.5, in the current report, regulatory filing, we can see we are about 3.0. So my question is as follows: whether this official 3.5 is applicable to the one calculated excluding the hybrid bonds, including hybrid bonds, or are you planning more hybrid bond issues in order to widen the difference between the two ratios? Well, then more further hybrid bond issues are not planned for now. In terms of how we calculate this ratio, this 3.5 including hybrid bonds. So this is the ratio that would have been calculated theoretically, of course, because I assume that at the end of this year this ratio will not be calculated for the domestic market bonds. This ratio would be higher because it would not include the impact of the hybrid bonds. Just a minute, this ratio will be higher. This for the domestic bonds would have been higher because the domestic bonds, according to the definition, this also treats the hybrid bonds as debt, whereas under the large bond issue program, the ratio does not include the hybrid bonds as debt. Talking here on the slide about the ratio below 3.5, we mean the ratio that includes the hybrid bonds do not represent a bond, do not represent a debt. Under this ratio, yes, they are not calculated as debt. So we're talking about the jump from 2.5 to Not more than 3.5. Exactly, from 2.5 to not more than 3.5. Thank you very much. Thank you very much. Anyone else? Yes, Mr. Grzegorz. Good afternoon, Grzegorz Witkowski, Insig News. Two questions. One to generation. When are you expecting to commission the two generating units? What will be the impact, first of all, on the reduction of the capex? And once the power plants, the generating units are put into operation, and the earnings, the results, once they start operating under the normal regime this year? That will be the first question. Second one, about the distribution, because you're assuming here in this outlook, 2019 outlook, stable, slightly up, slight increase, and there were different optics of different groups, because PGE during its presentation is assuming a decline, and the argument was the impossibility of passing on some of the costs under the current tariff regime. That's how they presented it. Energa, as I understand, and you didn't see this problem. How would you comment on that? Okay, let me start with the generation. Well, we are upholding what we are officially indicating, that the date of completing the 910 megawatt unit at Jaworzno is 2019, and the commissioning date of CGT unit at Stalowa Wola is also 2019. Of course, we are open here, but we are reviewing the risk all the time, especially in terms of Stalowa Wola. But for now, we are upholding this 2019 in the case of these two investment projects. The Jaworzno generating unit, when operating in 2020 throughout the year, should contribute to the improvement of EBITDA by more than roughly 350 million PLN. Whereas in 2020, we also have decommissioning, so outages of shutdowns of some units related to BAT conclusions. This shutdowns will be applicable to 8 units. 1 unit could be upgraded for 6 months or 4 months, so there will be quite a lot of outages and shutdowns, so this will have some impact as well. So the production could be limited due to that. The point is that we will not see in 2020 such a strong jump of the production output that would be only due to the fact that we are producing more electricity in using the 910 megawatt unit. That's also applicable to 2020. In the subsequent years, this production will simply be higher. And the 2019, anything could be expected from Jaworzno here? I understand the Stalowa Wola is under question mark, slight question mark, but Jaworzno will have some adjustment runs or test runs. Some electricity will be generated from that unit, not necessarily. This will be several million PLN. It will not be high. It is the end of 2019, so it's not going to be significant. Now, distribution. In terms of distribution, the outlook in distribution, that's true. The press conference of PGE was held much earlier before the President of Energy Regulators approved the tariffs. That's true. The prospects for the outlook for the distribution at that time was a bit different. We didn't know when the tariff would be approved. And this was applicable to the issues related to the fact that if the tariff is not approved at all in 2019, then we would have a problem. The impossibility to pass on that cost, because let me remind you that the distribution has higher costs, for instance, to cover the balancing difference. It's purchased simply at a much higher price, and distribution is not the final consumer, so distribution is not able to receive compensation for the increase of cost to cover balancing difference. However, the tariff has been approved now, and now we can talk about the effect of Q1. In Q1, there was no tariff. In the subsequent quarters, we had a tariff in place, and this tariff is lower due to the fact that there's a decline of a transition fee. However, it reflects our costs. It reflects to a large degree our higher costs of balancing difference. And in Q1 alone, that's true. This cost was not covered, was not passed on, but looking at the result of total distribution, we can see clearly that, as a matter of fact, the revenue that we have generated in the first quarter is simply close to the revenue we would have been generating had it not been, had we had the tariff in place, approved. in such a sense that we can see larger volume, a larger possibility of 2019 that this result could be higher had this tariff been approved at the beginning of 2019. That means that definitely would have been more optimistic with respect to the distribution segment had we had the tariff in place since January 1st. As of now, we don't see a decline, but we can see some slight increase. It will not be very high. For us, the approval of a tariff starting from Q2 means for us smaller benefits, not so much losses in this segment. Thank you very much. Among questions coming from our web watchers, web users, we can see questions related to the purchase of wind farms that the company indicated in October 2018. And the question to the management of when can we expect a resolution of this issue? And the second question is to quantify the revenue under the Operational Capacity Reserve and Cold Intervention Reserve revenue in 2019. With respect to the wind farm acquisition, we are conducting the negotiations process. The completion of this negotiations process, that's true, it's dependent upon two parties' approach. We expect it to take place in Q2 this year. However, subject to such a proviso that this will depend upon the progress of the negotiations process. In terms of respect to the second question, let me ask Director Niemes to try to answer this. With respect to the revenue from the Cold Intervention Reserve revenue, we expect in 2019 as the final year of provision of a service by the 3.6 Siersza and 1 unit at Stalowa Wola in the region of around 60 million. So it's around 2021, 22. It all depends upon the availability of those units during the performance of the service during a year, which results in a total of 60 plus million. In terms of the revenue from the Operational Capacity Reserve service, but let me apologize, but it's an indirect question about our trading strategy with respect to the generation for 2019. So please excuse me, forgive me, but I will not be able to answer this question. Due to the fact that I can see no more questions. There is one more. Good afternoon, Robert Mai, Ipopema. I'd like to ask about the cost in the mining segment. Mining cash cost is 353 PLN. In Q4, it's a large increase year over year. Is it the normalized level of cost that will be maintained throughout 2019? So a bit of a question about to what extent the geological problems will continue to occur in this year. And a question about the coal gasification project jointly with Azoty. Could you give some update upon this project? Because Azoty on their side are saying that this project might be continued along with you, jointly with you. Thank you very much. First question, mining cash cost in 2019. It will be, of course, under the biggest impact from the volume of coal output. We assume that the coal output will be higher than in 2018. This will mean that the mining cash costs should be lower, despite the fact that we are observing here an increase of costs overall. As such, we expect that this increase of coal output volume will allow us to reduce the unit cost. The EBITDA results should be higher. However, such a jump improvement, major improvement of the EBITDA will occur once we see the first effects of our capex that we are spending now, whereas the result of 2019 overall should be better, should be higher than in 2018. The coal gasification project that we are jointly conducting along with Azoty Group is at the stage of the analysis of the profitability of this project. As a matter of fact, more detailed analysis. And here, in this respect, we can see, of course, the prospects for this, good prospects for this project. But as of today, it's difficult to give you any more details because we ourselves don't know those details yet. We have to complete the analysis. It will take several months before we are able to say in what direction this project will go in as of today, we are optimistic about it. We will see whether this optimism will prove true as a result of our analysis. Thank you very much. Ladies and gentlemen, I invite you already today for the earnings conference related to the Q1 earnings. Our speakers will be at your service after the presentation. Thank you for accepting our invitation and see you next time. Thank you.